In today's episode, we're going to be covering off a little bit about mortgage basics and helping you understand mortgages if you're planning to buy your first home in Scotland. So we'll start off by getting right into what a mortgage actually is. So a mortgage is essentially a loan secured against a property. Now, if you don't have the money out there to go and buy a house cash, like most people don't, what you would do is you would approach a bank or a lender or a mortgage broker to sort it out for you, and they would start the process of getting you a mortgage. What the mortgage does is it provides you with enough money to go out there and buy the home. Typically speaking, you'd be putting down your own deposit, usually in the region of about 5%. There's options out there that would help you buy without deposits in certain scenarios, but typically you would be putting down a deposit at least 5%, and the bank or the lender would be covering the difference for you. That difference, what would happen is, because the bank's lending you the money and there's a mortgage there for it, the bank would usually be in most of the control throughout the process. Now, they can't force you to make your payments. However, if you do stop, what would happen is the bank's got the right to force the sale of the property and get their money back. So that's essentially, in basic terms, what a mortgage is. One of the key things that you should be considering when trying to get a mortgage is how much you could actually borrow. So how much you could borrow is one of the key factors in getting a mortgage. If you're looking to find out how much you can borrow, check out one of the other episodes. I think it was the episode yesterday or a couple of days ago. Check that out and it will help you understand what's taken into consideration when looking to borrow money. Essentially, there's a few main points such as your income, your outgoings, your age. These are the kind of things all play factors. But the video the other day goes into a little bit more detail on it. So firstly, what we'll do is we'll go through a few of the different types of mortgages that are out there. Now, there's lots of different types of mortgages, but these are the three main ones that I come across and that you'll probably come across when looking at mortgages. And the first one is the fixed rate. Fixed rates have proven to be popular over the last few years, and what these do is these provide you with a stable payment, and it means that your payments are guaranteed not to change for a period of time, whether you fix in for 2 years or 5 years, however long it is. So for that period, whatever you're choosing, your payments aren't going to change. There are usually drawbacks to this. So usually with fixed rates, you're tying yourself into the deal. So if you do try and come out of it early, there's fees involved. But generally speaking, you're tying yourself in for a period of time with a guarantee that your payments won't change. The variable rate mortgage is slightly different from that, and it's quite self-explanatory. If you think the fixed rate's a guaranteed stable payment, the variable rate's a payment that will go up and down the way. It can change, and typically when a mortgage rate has got the word variable in it, it's usually the bank that's in control of this rate. So typically and historically, rates have moved in line with market conditions. However, because the bank's in control of it, you might see interest rates in the market going up the way, and the variable rates might not. You may see the interest rates in the market coming down the way, and again, the variable rates might not, because it is the bank that's in control of them. If you're looking for something to move in line with market conditions, then the tracker rate is the option that could be of use to you. The tracker rate tracks the Bank of England base rate. So that means that whatever's going on with the Bank of England, if it's going up, the tracker rate would go up the way. Still a variable rate as such. However, it's got a different name and it tracks against the base rate. So that's the three main types of mortgages that I see. And make sure that you're taking advice on the right options for you. How to get a mortgage is something that will cover off as well. And it can be really, really straightforward if you're looking to buy your first home. Really straightforward to think about. The process is quite linear. So ignoring saving up for deposits and all of those kind of things, purely to get a mortgage, there's only 5 key things that you need to be worrying about. The first one that you need to consider is how much are you going to be paying each month for this, and can you afford it? The second one is how much are the banks willing to give you? So that's the two key elements to affordability: is how much can you afford and how much you can borrow. Is the bank willing to give you that? Once you know that, you're then in a position to go and look for your mortgage in principle certificate. Once you've got your mortgage in principle certificate, you now know what the costs are. You know that you're going to be able to borrow the amount that you need, and you know that the bank's going to give you the money. So now the next stage is to go out and find the right house. Once you've found the right house, you've had your offer accepted on it, as long as you can provide evidence of your income, your ID, your salary, all of these kind of things, it's time to apply for the mortgage. And that's it. 5 key steps. Once that mortgage application is in, you're on your way to getting a mortgage and becoming a homeowner. So that's the 5 key steps in how to get a mortgage. So once you are thinking about mortgages, you want to be considering the costs involved as well. So making sure that you've got money set aside for these. So this could be, well, the main one obviously is going to be the monthly cost in the mortgage, and you will have to pay interest on that. But there's also other costs. So you've got your things like your land tax to consider. There's legal fees that you would have to pay. You might have lender fees or broker fees to pay. And usually in Scotland, you've got the home report, but the home report might flag something up and you might want to consider getting an evaluation done or getting structural reports done. So factor all of these costs in when you're looking at houses. And don't forget, when looking for a mortgage, don't forget that mortgage advice is really, really important. As a first-time buyer, you will be required to get mortgage advice. Now, it's really, really important that you find the right broker or the right advisor that you believe is going to work hard for you. So whether that's your independent broker or whether that's the bank, you just need to make sure that you're doing the right thing for your circumstances. But I hope you found this video useful. Just a brief overview of what a mortgage actually is. And don't forget to check out my other videos. And if you did like this, please give it a like and subscribe. Cheers.